Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday, 14th November 2025, and joining Lee to pose some questions on the financial market themes for the week ahead is Simon Mays, Head of UK, Ireland and Switzerland Corporate Sales. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Hi Lee, great to have you with me.
Yeah, good to see you, Simon.
Thank you very much. I wanted to start today on the pound. So if you look at cable, pound versus dollar, it hasn't done too much this week, but if you strip it apart of it and look at sterling against other currencies, it's had a pretty rough week, really. So obviously a lot of focus on the upcoming budget, but what do you see as the main drivers behind the sell-off of the pound against other currencies this week?
Yeah, like you said, Simon, it's been a pretty bad week in terms of events for the pound. Firstly, we've had a run of weaker economic data from the UK this week, starting off with the soft labour market report at the start of the week, which showed a further contraction in payroll employment, and the unemployment rate as well, rising up to a new high of 5%. So while you can kind of have some doubt on just how accurate that labour market data is, I guess it does kind of reinforce the trend that had been in place anyway, that the labour market had been weak. And then that should give the Bank of England more confidence that labour market wage growth, should continue to slow. And that definitely kind of reinforces our view that they'll cut rates again as soon as next month. And we're looking as well for them to deliver 3 more rate cuts by next summer. So that has been putting kind of downward pressure on short-term yields in the UK and contributing to the weaker pound. As well, at the end of this week, we also saw disappointing Q3 GDP data from the UK, just kind of reinforcing that slowdown that we've seen over the last couple of quarters. Obviously creates a more kind of challenging macro backdrop ahead of the budget later this month. And
on that, actually, I guess sort of economic indicators aside, it's some potentially strange reactions to it. They came out and said they weren't going to raise income tax, and the pound fell. So how do you see the rationale behind that?
Yeah, like you say, I think they've kind of put themselves in a difficult position with their communication. Obviously, by Chancellor Reeves coming out the other week and having a speech to kind of set the stage for potential difficult decisions, that kind of encouraged the market to price in an income tax hike, which is seen as a more credible way of raising more tax revenues. And that has helped the gilt market to rally. The gilt market was rewarding the government for the expectation that they would take kind of more difficult measures to improve the fiscal situation in the UK. But like you say, today, overnight, we've heard that they don't need to raise income tax because the OBR has provided an assessment that the fiscal hole isn't as big as the government had feared, which normally, like you say, would be good news. But for the market, it's kind of created a bit more uncertainty in that the market had moved more to kind of price in an income tax hike. And if you look at kind of fiscal tightening measures as a package, and if you take out an income tax hike, you're looking at a range of more smaller tax hike measures, which you could argue is less credible from a market point of view. And I think that's ultimately why the pound and gilts have sold off today. It's just the doubt there amongst market participants that maybe the government is kind of taking this decision as a way to try and support their popularity. We've seen Prime Minister Starmer and the Labour leadership coming under more kind of questions over their leadership, and that could be certainly hurting kind of sentiment towards UK gilts and the pound.
Yeah, understood. We'll be hosting a webinar on next Wednesday, I believe, surrounding the UK autumn budget. So if you're interested in that, please get in contact with your sales representatives. Then just the other side of the pond and moving over to the US, the news, I guess, one of the big bits of news this week is the US government shutdown. Now, initially a bit of focus on that, but it's all gone very quiet for a long time. It's gone on for a while in the background. So It finally came to an end this week. How do you expect that to impact FX markets from here on in?
Yeah, like you said, Simon, some good news this week that finally this shutdown is over. Like I say, a record in terms of length. So I guess the first thing that we'll be watching to see is just how much that's negatively impacted growth in the US in the final quarter of this year. The fact that it's a record shutdown in length should mean that it has a bigger potential negative impact than normal from a shutdown. Like normally, growth does dip down and then bounces back very quickly once the shutdown comes to an end. But we need to watch that closely. But more important, I think, for markets will be the release of the kind of labour market data, which has been delayed up until this point because of the shutdown. So there are obviously reports that we could get the September payrolls data released as early as next week. And this we also heard as well from the White House yesterday, indicating that the October payrolls data will be released as well, admittedly without the household data. So we won't see information on the unemployment rate, but it certainly should put the Fed in a better position at the December FOMC meeting to make a call on whether to cut rates again for the third consecutive meeting. At the moment, we're kind of still holding on to our call that we think that labour market data, when it's released, will provide confirmation that labour demand has remained weak heading into year end, providing the justification for the Fed to keep lowering rates. And we think that will lead to a kind of further reversal lower for the dollar that we've started to see kind of play out this week. But obviously, we have to be also wary of the risks as well, that it's become a bit more of a toss-up over whether they'll cut in December. If we look at recent comments this week from Fed officials, including Boston Fed President Collins, who came out and said that she wouldn't back a cut in December. You can clearly see now that the hawks at the FOMC are becoming more emboldened, and there's definitely more kind of dissent within the FOMC. So it's definitely not a slam dunk that they'll cut again in December, and it will cut them down, I think, to the labour market data when that's released.
It's all eyes on the data for that December cut. Yeah, understood. Well, thank you very much. Yeah, that's good info. Have a great weekend, and we'll catch you soon. Thank you.
Thank you for listening to this MUFG Global Markets podcast. Rate, review, and subscribe. Contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.